Hi, welcome back to Financially Savvy Fridays. Today we're going to be going over how to pay down our student loan and credit card debt, right? The biggest things that we have to pay down. And if you remember from the previous videos, we talked about being able to pay down our debt and having a budget. And that budget we included was $400, right? So $400 towards our credit card payments, and we said another $200 for our student loans. So as you see, I have three little compartments here. I have two jars, and I have one little piggy bank. The piggy bank here, I actually look at it more as it's a student loan. So obviously we invested in ourselves and it's taking our money now that we're paying. The first jar is actually the highest interest rate credit card. So we're gonna pay our highest interest rate credit card because in the long run, if you're not paying that down or you're just paying the minimum, you're gonna be paying a lot more than any other credit card. For this example, we're saying you have two credit cards and your student loan. Plus your student loans are usually gonna be a lot less as far as an interest. So the first one, we're saying we have about $300 that we are going to be putting every month to pay down that credit card. Now it's more than the minimum amount, but if that's the most that we can pay over that, let's do that in the beginning. So the first month, $300, and we're going to continue to do that every single month, paying on time, which is crucial. The second credit card, we're going to pay the minimum amount, which is the $50, and it's included in there. And then the next one is we're going to pay also another $50 because that's included for our minimum payment for our student loans. So we continue with this, and let's say, yay, a year has passed by and we managed to pay down that credit card debt. And now you have $300 extra a month. What do? Go shopping? No, absolutely not. What you're gonna do is actually apply now those $300 to the next credit card that you're gonna pay down. So not only are you paying those $50, but you're paying an additional $300 toward that. So those $300 plus the 50 is now $350 a month that you're paying. And so forth. With this one now, you're going to pay an additional same amount, $50 every month. Now with this credit card, let's say another year has passed by, and yes, once again you get to celebrate because you pay down your other credit card debt. Now with the $350, once again you're not going to spend it, you're going to apply it now to your next payment for your student loans. Now you're not only paying just the minimum amount of $50, but an additional $350, now $400 a month. It's the out of sight, out of mind theory, where you just automatically keep paying what you've been paying for. Let's say 5 years pass, 10 years, depending on how much you're putting down, you've paid off your student loans. Yay! So now you have $400 a month that you're paying. Are you going to put it back into your little bag and go spending? No. Once again, you want to use now that $400 and put it towards something that's more useful for you. Savings account, retirement account, whatever you're choosing might be. But in the end, you're going to now have a little bit better financial savviness that you have, and also you'll get to enjoy the benefits that you paid it off and increase your credit score as you go along. Now stay tuned for next week, our last video,